All right, so there were a lot of debates during Politicon, and I'm going to be doing some breakdowns of certain parts of each debate. We have already delved into the Sam Seder one for a part of it. Now what we're going to be looking at is another clip from that actual debate. So what they're going to be talking about here is they're going to have a conversation about regulation and the regulation of banks. It's going to take a really weird turn here because Charlie Kirk is going to be in opposition to the Consumer Financial Protection Bureau, which is, I just don't understand why you would be in opposition to that. Well, also he claims that it's unconstitutional, and I'm like, okay, where do you back that from? Like, where in the Constitution does it, say that it's unconstitutional? Anyways, you guys are going to check this out here, and we're going to come back and talk about it.
And so if you want to diminish the power of Goldman Sachs and of Citibank and Wells Fargo, and we can agree on this, let's call for a 21st Century Glass-Steagall Act. We can do something bipartisan. This will be great. And we can actually diminish the power of these banks.
So I will say you'd actually find more acceptance to that argument in me than most people, because I think there is some merit to the argument that the repeal of Glass-Steagall did open up the reckless behavior of banks. However, I would say in talking about 2008, it was not the primary factor nor the secondary factor of why that financial crisis was created. It was first and foremost Fannie and Freddie, which is a government-sponsored institution that has yet to be held accountable, that has never showed their books to the taxpayers. AAA bond rating crap. AAA bond rating mortgages where people had FICO credit scores that were beyond F, that had median income around $35,000 a year, never actually visiting the houses that they were giving the mortgages to. It was B and B minus loans that they were looping together with AAA bond rating, and they were in bed with the rating agencies. So I think Sam and I would agree that there was widespread collusion. Fannie and Freddie is not Wall Street. It is a government institution that Congress sanctioned, had yet to be held accountable.
Fannie and Freddie, you're right. I mean,
they're government.
It's a quasi-government function, but it's enough. But Fannie and Freddie entered into that subprime market 4 years after all the major banks did. Believe me,
but Sam,
you were in high school at this time. I can assure you.
Sam, let me finish.
I paid attention to this. Now,
can I finish the point?
Well,
or are you going to continue to argue from authority?
The banks gave bad loans. We need more regulation so they uphold their fiduciary duty.
Okay, so let's. I want to finish the point on the financial crisis. You couple that.
I want to get to trade and tariffs after that.
The Community Reinvestment Act, which incentivized these banks to give loans to low-income communities. The Community Reinvestment Act, you can read the actual language of the bill, had quotas for banks over a certain level to give these loans out. You triple that with Alan Greenspan artificially lowering interest rates after 9/11. So you had cheap money flowing all around, and all of a sudden people said, oh, you can't question the housing market. It's as stable as can be. When you looked at the mortgages that Fannie and Freddie were AAA rating, a government agency, the banks were trading off the...
Fannie and Freddie did not do the ratings.
Sam,
the ratings were by three agencies that were not government agencies.
Sam,
Moody,
Fannie and Freddie, the banks were trading off the confidence that Fannie and Freddie gave them because they said, oh, but Fannie and Freddie is trading it. Oh, my goodness, we could trade it. So then Goldman Sachs never actually looked through the mortgages because first and foremost, they were incentivized to do it. They had the cheap money from the government. And finally, they had the confidence and the conviction, which was all false, by a government agency to trade on these loans to destabilize our economy. Now, the bankers that lied, like the Wells Fargo's executives that lied, they should be in prison. You and I agree on that.
If there was a scrawl underneath here, it would be really embarrassing for you, because everyone who knows anything about banking knows that there were three rating agencies. Their names were not Fannie Mae and not Freddie Mac.
I never said they were a rating agency. They were trading them as AAA bond rated, and they were said these
rated them.
They were rated by the three rating agencies.
Right. Are those agencies government agencies?
So what did Fannie and Freddie issue to
no?
J.P. Morgan?
Yes or no?
They are not government agencies.
That's
independent.
right.
They're independently governed. Hold on. Who is supposed to regulate them? Sam, hold on a second. Who is supposed to regulate them? Did the SEC do their job in regulating them? No.
Part of Dodd-Frank.
I thought the SEC was supposed to keep us safe. It's the biggest government failure of the modern era. The SEC, that has a $30 billion budget every single year, did not even walk into these rating agencies and say, show me these mortgages, show me the FICO scores, show me how they're 18 months delinquent on
Dodd-Frank. If you're arguing that regulators were not on the ball, you and I agree. There should be stricter regulation.
I'm arguing that's what happens when you continue to add these layers and layers of regulation, and then you blame capitalism for it. You're like, oh, you have all these regulators that used to work at Goldman, they used to work at Credit Suisse, they used to work at Wells Fargo, they go work for Fannie and Freddie, they go work for the regulators, They say, oh, it's just a failure of capitalism despite government being the one AAA bond rating.
So, if I understand you, the failure of regulation to regulate the capitalists who gambled with money that was putting our entire economy in jeopardy. The failure of those regulators to do their job, the answer to that is to have no regulation and just let it be completely wireless.
So I know, first of all, Dodd-Frank does the exact opposite of it, number one. Number two, the answer
Dodd-Frank tried to regulate
so first of all, you know what the
those
solution
three
is?
agencies.
Sam, I'm so glad you asked. You want to know what the solution is? The solution is we should have let the banks fail and make them pay a price for gambling with our money. That's the solution. Because they won't do it again, Sam. If you bail them out and you give the Wall Street executives huge bonuses, and the Wells Fargo executives should be in prison. You and I agree with that.
Yes.
They gambled with our money.
Yes.
But you don't have recourse. You don't have punishment. They're going to do it again.
Yes, I agree. If you don't punish them, they'll do it again. Or if you let them have the regulatory space to do it again, they'll do it again.
No, so that's where you and I disagree. It wasn't the regulatory space. It was Fannie and Freddie that paved the way. They were the ones they were the number one distributor of these falsely labeled AAA bonds. They never actually saw the mortgages they were trading. Fannie and Freddie to this day, they've never opened their books.
Okay.
We fund them, and they have never opened their books.
We do not. Listen, the bottom line is the reason why we had such a severe crisis was because of the relationship between the commercial banks and the investment banks. Fannie and Freddie bought those mortgages from those banks 4 years after the run started. I agree with you that you have some of the elements correct. You don't understand the role of Fannie and Freddie in that crisis, but it's largely irrelevant to the point I'm making, which is the crisis was as severe as it was because we rescinded Glass-Steagall under a Democratic president and a Republican Congress. We could go back and we could, today, we could reinstitute it and save the banks. A guy like Steve Mnuchin, I agree with you.
There's some
he
merit
should be in jail. He did this stuff.
I'm not going to talk to Steve personally, but I think where we could agree, where Sam and I agree, is there's something fundamentally wrong that somehow a prerequisite to run the Treasury Department is working at Goldman Sachs. There's something wrong with that. And that is cronyism, not capitalism. Now, Sam will say, well, that's what happens when you allow capitalism. I would completely and totally...
Well, when you have corporations gain so much money and power, they're too big, and we need to make them smaller.
I had 4 seconds of an agreement moment, so I want you all to remember.
How does the market make these entities that have too much power smaller?
Competition. Because you know why?
Who's keeping someone from competing with Amazon? Who's keeping someone from competing with Google?
Oh, okay, so I'm glad you asked.
Who's keeping someone?
Nobody. But you know who's keeping them from? You know who's trying to compete? Who's preventing them from keeping to prevent against Goldman Sachs and J.P. Morgan? The Dodd-Frank bill, because it has so much regulation and such cumbersome rules, it disallows the local community bank from ever competing against them.
The local community bank is going to compete against Goldman Sachs?
Oh, wait, hold on. I'm so glad
They've all been bought.
That's a great question. Where did these banks start from them, Sam? Where did Wells Fargo start? It started as a local community bank that eventually did a very good job of running their balance sheets, and then they became one of the Wall Street banks. It's not unheard of that
when there was no Dodd-Frank.
Exactly right. It was before Dodd-Frank, Sam.
Right. And they were not allowed to merge until that 96.
No, again, I think there is some merit to your Glass-Steagall argument. I do not think that is the primary factor why 2008 happened, nor would I say that reinstating Glass-Steagall will have competition back on Wall Street. We will get competition back on Wall Street when we decentralize the SEC, when we decentralize the FDIC. We make it easier for people to give out loans and have FDIC deposit insurance backing. That is so hard to do right now because Goldman Sachs doesn't want that competition. It's very simple. When you have someone from Goldman Sachs running the Treasury Department that will probably work for Goldman Sachs after, and they worked for them before, they're going to try to protect Goldman Sachs' interests. What does that look like? Create rules and regulation that make it very hard for other banks to compete with Goldman Sachs. You and I agree with that.
We agree that the middle class is suffering for Trump's continuing to allow Goldman Sachs in there. Maybe we should both vote for Bernie Sanders.
Well, so
Elizabeth Warren.
And again, it's important to remember it's not just a Republican or Democrat thing. Both parties allow Goldman Sachs to run the Treasury Department. But let me say this:
Elizabeth Warren and Bernie Sanders definitively would.
Well, she might 1,024th allow it to be run, but 1,024th the Treasury Department might be run by someone from Goldman Sachs.
So while we still have a little bit of time, I want to make sure we talk about trade and tariffs. I suspect there might be some.
Alrighty, so as you guys did just see there, there's a lot there. There's really a lot going on there. They are mainly in talks about bank regulation that has to do a lot with Dodd-Frank and the different regulatory measures that Sam believes should be put in place, and conversely, the ones that Charlie thinks should not be put in place. So it's pretty funny because he essentially starts out by saying, you know, the banks saw the, Fannie Mae and Freddie Mac, the GSEs, and, said, oh, well, they're doing it, so, it must be great. And, that was their model. That's complete BS because, as you guys know, the full-on huge banks, they were literally in cahoots with the three rating agencies, and we know that they literally paid them off to make up these fake ratings for these, these tranches that were clearly not actually AAA bonds, and the AAA bonds end up being complete garbage, and then everything before that was somehow even worse garbage. So it's really weird that he says this here because it's like the issue is that the private is not that there was some regulation failure, right? The issue was that it was dependent upon the private sector for regulation in the first place. So the fact that we didn't have the government actually being some independent, sort of body to actually rate these, because the idea of having a private sector solution to basically having these businesses who rate these bonds is probably one of the dumbest possible things, one of the most boneheaded things you could ever possibly think of. Having a private company regulate, have it basically making the guidelines, which is like there's an obvious massive conflict of interest there, and it's so easily corruptible. I mean, you have the trivial, very upfront, not trivial, I meant upfront is what I mean. Very right in your face, right from the jump, which is that, okay, we have this burden of protecting people in terms of not being misled by these banks with, making sure that the loans that they're getting aren't complete garbage, making sure that the loans they're getting, they're not being defrauded, make sure they're not being lied to, make sure that these are actually safe, make sure that, these different loans aren't complete trash. And that did not end up happening because obviously there's a conflict of interest going on there, which is we want to make a profit, but also we, have this burden to protect the American people. So those two are bound to collide. And so this moron blames government regulation and the SEC's lack of doing something when the problem isn't that the government didn't work. The issue is that it was a private system that was supposed to check it in the first place. The issue was that it wasn't a governmental body that was making sure that had at least some oversight on it. They didn't have anything. So the issue wasn't that it was, failure of government regulation. I mean, the SEC, and remember, this is under the Bush administration as well. So I don't think he really wants them doing much for the banks because obviously he's in bed with those guys. Of course, the Democrats are too. So the idea that it was a failure upon government regulation is laughably stupid, and it doesn't make any sense. So he then basically starts arguing against himself because Sam kind of tricks him there because, Charlie Kirk says, it was a failure upon the regulators. And Sam flips it on him because he goes, yeah, you know what? If you're trying to make the argument that the regulation failed, I agree. But the answer to regulation failing, which was, by the way, a messed up system from the start, which is like, You don't have a system where private companies looking to make a profit are supposedly supposed to protect the American people from being defrauded. You don't have that, and then the SEC is supposed to work some magic, and without like complete direction to actually check that, they're supposed to do something to really stop this. The issue is that the regulation was not enough, that it wasn't regulated harshly in the first place. That was the issue. And so Sam flips it on him and goes, oh, if you want to say that regulation didn't work, I agree. I think that they failed because they didn't do their job. And for someone to come away with a conclusion from something like that, as basically his conclusion essentially was, let's get rid of all regulations. Like, you moron, what the hell are you talking about? It doesn't make any sense. Why would you have a system in which regulation didn't work and it was based on private companies messing up in the first place? And then your solution is then to go and say, well, regulation didn't work, so forget it. Let's just keep with the stupid, boneheadedly simplified, just massively dumbed down, false or just shitty system that you have in the first place. And so that's what you get when you have rating agencies that are private. They're actually going to be corrupted. And then, he says like Goldman Sachs CEOs go to work at Fannie. Nah, dog. They go, and just like Donald Trump has, where he's Steve Mnuchin and Gary Cohn in his cabinet, they then go and then ease regulations. And again, his answer to that seems to be that, we just need to ditch regulation, which doesn't make any fucking sense. And Sam Seder asks him the question point blank up front. He goes, hey, so is your like response to get rid of all regulations? And he can't respond. His response is, well, Dodd-Frank isn't helping. It's doing the opposite of regulating. He's not even responding. That's insanity. He's not even responding to the damn question. He's sidestepping. He's hopscotching. I don't think that's the right word. But he's sidestepping to basically saying, well, Dodd-Frank isn't doing it. Well, answer the damn question. Do you think there should be no regulation or not? Like, come on, be up front. If you're going to be a douche up front. And a lot of the things of Dodd-Frank, and all of Dodd-Frank is good, by the way. There are the stress tests, I think, are something that are really important that have not been met. There are a lot of foundational issues with our banks today in the United States. I remember seeing a clip of Elizabeth Warren, I believe, questioning Janet Yellen and basically breaking down the statistics of how, despite there supposedly being, these stress tests, these banks are far bigger than they were before. I guess sometimes the stress tests are done, but I mean, the truth is if one bank goes down, the economy's collapsed. So the stress tests are really important. And there was one of the people, I forget his real name, but he was from the Big Short, the book and the movie. And he says that basically the leveraging was far too much. And he said that Dodd-Frank had brought it down. And so Dodd-Frank has a lot of great measures in it. And I'm going to end up talking more about this later, but the idea that there's like banks are too small to succeed, like that statement literally triggers me. Like that's a triggering statement. Like the community banks are everywhere. And I'll get to another stupid thing about that actually later on as well. But here's something interesting. So he makes a statement saying that the banks should fail, that the government should have let them fail because then it will make it so that the bankers will not do that again. And you guys may be like, yeah, that's right. The issue with that is, and this was because I like to actually like think about the stuff that I say. I'm not a hack, so I actually like critically analyze, especially staying consistent. And basically the crossroads I was at was, and this is the argument, is you can let the banks fail, you can let them fail, but you end up going into a Great Depression, or you can bail them out and not go into a Great Depression. So what does that mean? That means that if you let all of those banks go under, remember the Lehman Brothers went under, and then all the other banks started going under, but they got bailed out. Some of them emerged. But like Bear Stearns merged and a bunch of the other ones, Washington Mutual, I believe, merged too. I don't know. I think they merged. I don't think they went under. But basically, a bunch of banks went under and some of them merged, but they were bailed out. So these banks got bailed out. Now, what I think the solution is I think we have to bail the banks out and then basically prosecute all the people who are at the bank. Because the issue is if you allow the banks to fall through, the economy will 100% collapse, because every single thing is on those freaking loans in that bank. And when the bank goes down, you're talking about your mortgages, you're talking about car loans, you're talking about all kinds of loans for even other businesses. So you're cratering the economy. If we had let all the banks go under, we would have literally dipped into a Great Depression. So while some of you guys may think, oh, yeah, we should let them go under, we couldn't do that because we would literally be in the Great Depression. That's what we'd be in, the Great Depression V2, had we let that happen. That's the worst thing you want to do. So I think the solution in that case is to bail them out, and then after bailing them out and restabilizing, you prosecute every single person there, put them in jail, and then have them serving massive sentences. And that can serve as a sort of deterrent. But also, I want to say this, is that when he says that if you let them fail, that will then like teach them a lesson and they won't do it again, that assumes that people act rationally. That's false. First of all, because if you don't actually have regulators prosecuting them, that's not going to do anything, because those people were still getting massive bonuses. So even when those banks go under, it's not like the CEO is going broke. No. The people who are getting screwed are the people. Those are who are getting screwed, the people with the loans. But like, if you know about the bankers, I forgot which. Well, I think all the CEOs got massive amounts of bonuses. Actually, I think it was the CEO of the Lehman Brothers, if I'm not mistaken. I forgot his name. It might have been Dick Fold. I think he got like a bunch of bonuses, despite his goddamn bank going under. So, like, it's not really going to teach those people a lesson anyways, but let's entertain and steelman that argument. When you're getting fat checks like that, because the checks that those bankers were getting were so fat, those numbers will blind your rational thinking. This is a faulty premise that people think rationally. It's the same BS thing that Dave Rubin said when he was on Joe Rogan. I think that people are incentivized to do the best job. That's false. People are incentivized to make the most money. They're not incentivized to do the best work, because they just want to make money. They don't care about doing the best work. You're making the connection, which isn't there. So I disagree with that conclusion, because I believe it's built on a faulty premise. And that's something that I've come to the conclusion to over quite a bit of actual thought about this. So here is the point that I want to, a big point that I want to make that I talked about earlier. I don't even know if Charlie Kirk knows what Glass-Steagall is, because based on his responses, he never really specified or explained anything about what Glass-Steagall was. Well, so Glass-Steagall, basically what it did was, it made the banks separate, your commercial banks and your local banks, and it also prevented the merges as well as them gambling with your money. So Glass-Steagall, here's the funny part. Glass-Steagall prevented those merges, right? So if you're somebody who believes in community banks and small banks, why on God's green earth would you be in opposition to the repeal of to the Glass-Steagall Act? The Glass-Steagall Act is perfect for community banks. Do you know why? It's because it prevents these community banks from getting merged and bought up. Once the Glass-Steagall Act was repealed, mergers went through the roof. And so it's like, okay, and Charlie Kirk goes, they've been going down. It's like, well, no shit, Sherlock. It's because they've been merging and getting bought out by every big bank. So it's like, what do you expect is going to happen? So he's obviously drawing, making bad conclusions there too. And then you've got the amazing competition buzzword. It's insanity, man. It's insanity. That's seriously your answer? Competition? Like, this is some Dave Rubin. This is literally what Dave Rubin said. He said, this is a meme. For me, it's a meme where he went, competition will kick in. Like, dog, are you like, what is this? A freaking econ class? Like Econ 101? Dog, that's not how life works. Okay, not in 2018. Okay, no community bank is going to compete. The only way for a big bank to compete is for a bunch of them to merge, which is not what you want to happen if you're in favor of small banks. So I want to reiterate that Glass-Steagall should be supported by Charlie Kirk. He should not be in opposition to Glass-Steagall. He should be in support of it. But also want to reiterate that a very triggering statement is that banks are now too small to succeed. No real examples of that whatsoever. If anything, the biggest cause of the lessening of smaller banks is because of the repeal of Glass-Steagall, with mergers happening. So again, Charlie Kirk sort of stomping on his own stupidity.